I have a question for you. What is the central problem of financial markets? Are these evil central bankers, or maybe dishonest brokers, or inflation, unemployment, or something like that? Well, no. Problem is something more fundamental, and most of the issues I asked you before is more of the consequence of one central problem. And this one central problem is the fact that we don't understand nothing and we don't have any clue about the future. That is the central problem of financial markets. Why? Well, because we are trying to forecast the markets, at least most of the people try to forecast markets, but they are trying to do in the environment which is by definition impossible to forecast. So, let me give you a couple of explanations here. If you have seen financial news media or trying to listen to some sort of analysts or professionals in financial markets, most of the time you will hear answers or solutions to what will happen in the future and how to fix that. Like what will happen with oil prices, what will happen with interest rates, what will happen with inflation, how high the stock market prices will be, what will be the currency rates, what will happen with Bitcoin, and like you know the drill. And do you know how much, what's the percentage of these forecasts? Well, they are close to 50%, or in other words, they are as good as coin tossing. That's the thing. Well, I will probably go into inability for anyone to forecast markets in this video, but I will just state this fact that no one has any ability to forecast markets, because otherwise actually most players will be more profitable if they would able to do that, but they are not. Like no one actually foreseen COVID, or absolute majority didn't know about war in Ukraine, or that I would say in financial markets they didn't, because otherwise the most important players wouldn't have that grave of the consequences of these events. So, and that's the thing, like most of us can understand what will happen on average in long term. Like the stock market prices will be somewhat higher and central banks will be more or less effective most of the time. Yes, we all know that, but there are these 1 or 2% events like COVID or something like that, which no one knows and which make profound impacts with extent and that it's much more important than these foreseeable events. Like I will put it now within the different worlds. Most of the time we know what will happen, because most of the time nothing interesting will happen, and you just could say that economies will eventually grow, or prices will be more or less stable with low inflation, and as a consequence of that, like stock prices will rise. We could say something like that, and actually that's not a forecast, that's more or less stating the fact. But there are those couple of instances where everything goes completely wrong, when nothing is foreseen and no one knows everything, and these small events changes the picture completely, and everyone is sucker to these events, or like most of us, not anyone, but most of us. And that's what I mean by our inability to forecast markets or understand something. But these low probability events happens rather frequently, and in fact, if you see history of financial markets, you would see that there is some consistency on that, even though the classical, or how should I say, mainstream theories of finance says that these events shouldn't happen at all. Like, and there is that problem. People think that they know something or understand something, even that they are smartest minds out there, academic finance in this case, and they say that nothing irrational will happen, or happen once in like a couple hundred of years, but happens once in 5 years or something like that. And that's the thing about trading, that's one of the things, or one of the angles, how we should see that thesis on unpredictability. we don't simply know it and we try to take fancy words and fancy algorithms or something like that just to sound more important and to just put that away. Like, this is irrational, you shouldn't think about it. Oh, this was unforeseen and we will get smarter next time and things like that won't happen. But people like I have been talking things like that for, I don't know, more than 100 years easily, or in fact I think they have been talking about these sort of things as long as we have financial markets. And don't think people 100 or 150 years ago were dumber because they didn't have iPhones or Bloomberg terminals. I believe in fact they were actually smarter than they are now, because all this technology and availability of information just dulls our senses and gives us overwhelm. But that's another story. My point is, at every time in financial markets history, there were so-called smart investors and rational players who thought that uncertainties is some sort of exceptions to the rule and we are rational and we will forget about these things after 5 years or maybe next generation. But guess what? Things like that happens every 5 or so years, and everyone actually is raising their heads and asking how should this happen and how we should avoid it in the next time. But guess what? Next time there will be some sort of crisis which also will be unforeseen, because it will be effectively different than the previous one and no one knows how to react on that. Because COVID was new, Russian war was sort of new, because no one would think that something like that will happen in Europe, but it still happened. And maybe after in 3 or 4 years there will be something new, something unforeseen, which rational investors and sophisticated people with good educations didn't forecast. That will happen because it happens. But question now is what to do. First and foremost, you have to acknowledge the fact that you don't have any idea of these things and you cannot rely on long-term forecasts unless they are completely vague, like in the next 100 years maybe stock market will rise and major currencies will lose their value. Something as equally vague as that, because you don't have to forecast markets to understand that. That's the way how financial system is built, and that's actually not forecast. But you shouldn't rely on things like that. The fact that you know what will happen with oil or certain stock or certain, I don't know, cryptocurrency. If you rely your investing strategies or decisions of the fact that you somehow for certainty know that something will happen and that would make financial markets to be priced in certain way, you're in deep trouble, because actually no successful market players does that. Not most, but all those who are consistently successful rely on fact that they rely on probabilities, if you could put it in this way. What that means is that they have probabilities on their side. They somehow are managed to able to minimize their losses and maximize their gains in their investing or trading strategies. Or they are relying on the spreads as brokers and financial exchanges or bankers do. Or they have some blend of these two. But none of us have relied on market forecasts. No investment bank makes money on forecasts except for selling these forecasts as an analyst. No broker makes money on that. No exchange does that. No investment fund does that. They have their own strategies which relies on something fundamental, or by fundamental it means that they rely on, for instance, on the fact that stock market will rise over the next 100 of years, but that's not a forecast. Or that markets will trend, that's also not a forecast, that's probability. And they have ways how to execute these probabilities and sophisticated ways how to make money on that. That's how they make money. And if you want to survive in financial markets, you have to do just that. You have to rely on principles that has been working without forecasts, by including the fact that something bad once in a while will happen, by finding best ways how to make money on that, because that's the only way how you could survive.